Okay guys, so let's get started with the Professional Options Trading Masterclass video series here on video number 1, Defining the Mandate. The course is obviously a whole bunch of videos. Myself, Anton Creel, ITPM Managing Partner, will be your main tutor and mentor throughout the course. But Raj Malhotra, one of our senior trading mentors, whose speciality and background is professional options trading. He was the head of trading for options, head of options trading at Bank of America and Nomura Bank out of New York. He's going to be partaking in tutoring options as well later on in the course. And also Christopher Quill, who is one of our quant specialists and former options trader from Ruffer Asset Management. Chris, who's at the Institute, is going to be coming into the video series later on as well. And Raj and Chris will be adding a lot of information into the course later on. So let's get started. Options trading. It's obviously a very popular instrument. Options in the United States are far more popular as a trading instrument relative to international traders, and there's various reasons for that. We're going to look at those reasons in the coming videos, but let's get started with defining a mandate for all retail traders. It's very, very important when defining your mandate, really to define what you're not going to be doing when you go into the options market. Why is that? Well, when you're trading as a retail trader, your mandate is pretty different to a lot of the perspective and perception that a lot of brokers and educators and even former or current options market makers that teach retail traders how to trade options. And it's very important to define what your mandate actually is, because if you don't understand what your real mandate is and you don't solidify that to begin with, you can't really have a solid trading plan that's going to allow you over many, many years to actually get value out of trading options. There's so many options trading strategies out there, and we're going to see later on in the coming videos how many there actually are. If you don't define your mandate early on, you can end up actually trading so many of these strategies when they don't actually fit your mandate as a retail trader. So what we're actually going to do is define the mandate of retail traders globally to really understand how we can use options profitably over our lifetime. And there are some differences in the US and international traders, but essentially options really do add a ton of value to retail traders and their trading mandate and their overall strategy. So first of all, let's define what we're not going to be doing in this video series. So the first thing to really understand is that in this video series, we're not actually going to be teaching you how to obtain fundamental views on stocks and Forex pairs. This is because the Professional Trading Masterclass video series and the Professional Forex Trading Masterclass video series actually teach you that. So the PTM video series focuses on the stock market and stocks, and obviously the Forex Trading Masterclass focuses on currencies. So what we're not going to be doing in the Professional Options Trading Masterclass is teaching you how to get a fundamental view on stocks and Forex pairs. What we're going to be doing is making the assumption that you actually have one of these systematic processes already in place. So this is what the PTM and the PFTM actually teach. They teach a systematic framework on obtaining fundamental views on stocks and Forex pairs. and teach you how to take positions in those assets using cash and non-options derivatives like futures, CFDs, ETFs. So CFDs are contracts for difference and ETFs are exchange traded funds. So contracts for difference, international traders will be very aware of what these are. And if you've been trading for a long time in the US, you'll understand what CFDs are as well. But they're no longer available in the US. So in addition, in the PTM video series and the PFTM video series, as part of these video series, we teach systematic frameworks on how to obtain fundamental views, but we also teach how to time the trades, how to manage the risk of the trades, and also how traders measure their performance properly in the same way that professional traders do. We're not going to be doing that in the professional options trading masterclass. So the key here is just as a takeaway, when we go into the POTM, we're not actually going to be teaching you how to select a particular stock and say, okay, I believe this stock is going up, I believe this stock is going down, and fundamental reasons why, and the systematic framework to actually get there. If you want to obtain that skill set, you should just subscribe to the PTM and or the PFTM video series. If you've already got them, the POTM video series, the options trading masterclass, is going to be a very, very good addition to that knowledge. But also, if you've come across the professional options trading masterclass and you haven't taken the POTM or PFTM, and you've actually already got in place a professional level systematic framework that actually gets you as a trader fundamental views on stocks and Forex. If you've already got that in place, the POTM is going to really help you when you come to structuring trades. So what we're not going to be doing in the POTM video series is repeating all of the information that's available in the PTM video series and the PFTM video series, i.e. the fundamental trade idea generation process, the systematic process that enables all traders, used by professional traders, in obtaining fundamental views on stocks and Forex. We're not going to be repeating all of that information here. So if you want that information, you have to subscribe to the PTM and or PFTM video series. Options are a derivative product, and the value of an option depends and is derived from the price of its underlying asset. And due to this, options really need an entire video series dedicated to them, because they're much more complex as derivatives in terms of understanding than non-option derivatives. So other financial derivatives like index futures, currency and commodity futures, ETFs and contracts for difference, they're much, much easier to understand because those derivatives simply mirror the price of the underlying asset. So if you have a view on an underlying asset as a retail trader, you can use those derivatives to express your view very, very simply and cleanly. Unfortunately, options are far more complex, and due to CFDs getting banned in the United States in 2010, retail traders in the US now use options as their primary leveraged investment vehicle for expressing their views in an underlying asset, and they actually also speculate on the value of options. Now, what do we mean by this? Well, CFDs, if you're an international retail trader, you'll know that the leverage component, i.e. the margin requirement for trading CFDs, is very, very low. Therefore, the leverage component is high. So typically, international CFDs on stocks, for example, you're looking at a 10% margin requirement for the vast majority of large and mega caps, even a lot of mid caps in the stock market, in the US stock market. So international CFD traders, retail traders, can take up to 10 times leverage what they deposit in their trading account. Unfortunately, in the US, CFDs were banned in 2010. And now, if you're going to take the same notional dollar positions as international CFD traders, in the US, as a retail trader, you have to put up a lot more margin. Pretty much across the board, overnight margin requirements on large and mega cap stocks is 50%. So options have become a really popular leveraged investment vehicle amongst retail traders in the United States, simply because of the leverage element and the margin requirement for taking overnight positions in stocks. So at this point in time, 2018, retail traders in the US are going to find this video series very, very helpful indeed, because they don't really have any other way of getting considerable leverage to their trade ideas. Leverage in the UK and Europe and Asia Pacific for CFDs is typically 10% margin requirement. So the international CFD traders, to get the same fundamental view or expression of that view in a leveraged investment vehicle, they can put up a lot less money to get the same exposure as guys in the United States. So guys in the United States, because they have to put up a lot more margin, tend to gravitate towards options to express their views. Now, does this mean that the POTM video series is not going to be helpful for international retail traders? Absolutely not, because there are an incredible amount of situations in which an options position is a lot more beneficial than simply having a cash or CFD position that mirrors the underlying asset that you're taking a view on. And obviously CFDs outside the United States, for the international retail trader, they're a very, very popular instrument to express trading views. And they've come under the microscope, under the spotlight a lot from regulators because of the leverage component. And there was a reason why they got banned in the US in 2010, and we can all guess what that is. It was post global financial crisis. It's because retail traders in the United States, the vast majority of them blew up during the financial crisis, because the leverage component of CFDs and the margin requirements on positions that they were losing money on started to escalate, and retail traders couldn't post margin. So they lost a lot of money. They were over leveraging and overexposing themselves, and the vast majority of them blew up. So the regulators in the US actually banned CFDs in the US in 2010, and at some point they might actually get banned internationally. So if you're an international CFD trader, it's very, very likely at some point, even if there's a big downturn in the market at some point and everyone loses their shirt, it's very, very likely that at some point in the future, either CFDs are going to be banned outright in UK, Europe, or Asia Pacific, or the margin requirements are going to go higher. So they could increase significantly at some point. So this basically means that retail traders, both in the US and internationally, have absolutely no choice but to obtain this skill set. So the skill set of learning how to trade options properly. But there is a but. As with any complex skill set, and trading options is a pretty complex skill set, it's very important to learn how to do this properly from professional traders, and not market participants that have a conflict of interest. So brokers, market makers, and the landscape of the trading education market, charlatan trading educators that have no background at all at the professional level of trading, and essentially they're just brokers in disguise. If you want to really understand what that means, please go to YouTube. We've got a free video out there and just type in Anton Creel annihilates retail brokers and trading educators. Just take that title and put it into YouTube and you'll find the video. If you're going to get a very complex skill set like options trading and dedicate your time to learning how to do this properly, you can't pretend to learn it, and you can't learn it from people who have a conflict of interest. We just charge a flat rate for the education, and that's it. There's no obligation afterwards to do anything with us. So we're just passing on the information at a flat rate, and there's no ongoing subscriptions or ongoing commissions to pay where the institute's getting paid by brokers through the back door. None of this funny business. The conflict of interest is a very important situation for the retail trader. You've got to avoid it. You have to avoid these people, and you've got to get it directly from professional traders. Myself, Raj, and Chris Quill. So Raj and Chris Quill will be partaking in the professional options trading masterclass video series later on. We've been trading options for years and years and years with our own money, and at the professional level with banks and funds money. And guys like Raj, for example, Raj was the head of options trading on Wall Street at Bank of America and Nomura, and Chris Quill traded the options book for Rafa Asset Management, who are, in the last 25 years, they have the best returns in Japanese equities in the last 25 years globally for Japanese equities funds. And one of the reasons for that is because they hedge and trade their portfolios very, very aggressively using options. And myself, I was a prop trader and market maker on the trading desks at Goldman Sachs, Lehman Brothers, and JP Morgan. And trading options was just something we always did and had to do all of the time in order to get a better return over risk profile. So, myself and Raj, for example, we've been doing this for a good 15, 17 years now. You can't learn this stuff unless you learn it from professional traders. So when we're defining our mandate, your mandate as a retail trader and our mandate in terms of the best way of teaching options trading to retail traders, it's very, very important to understand this stuff, and it's very important to understand what we will not be doing. So we definitely won't be teaching a systematic process of how to fundamentally select stocks and currency pairs to go long and short. So the fundamental trade idea generation process. What we're going to do is assume in this video series that we already are at the stage of what we call fundamental predisposition. What do we mean by that? We are predisposed to a fundamental view already. We are going to assume that we have a systematic framework in place to select longs and shorts fundamentally. And now we're deciding what instrument to use in order to express the trade idea. So what does that mean? Well, what it means is that we're going to assume that we have a systematic process like this one, a fundamental systematic process already in place. So it's good to be aware of these things. It's good to understand what we're not going to be doing, because it allows us to really define the mandate properly here. And as we move further through the options trading masterclass, we're going to be building on top of this a hell of a lot of knowledge and understand how to trade options properly. But first, you've really got to understand what a systematic process is. If you've already got the PTM and or the PFTM video series, you'll know exactly what this means. If you haven't, it's something that we have to, at this stage, right at the beginning, just define for you. A fundamental systematic process is really a four-step process. You've got idea generation, which generates views in stocks, commodities, currencies, and bonds. And then you have, after you generate ideas, a gatekeeping process. Part of the gatekeeping process is risk management, and then you have self-awareness statistics. So you're critiquing your performance. Idea generation is by far the most important part of this, okay? Generating a view on the world in the stock market, generating a view on industries, so sectors, and then also generating views on stocks that are part of these sectors. And the world view feeds from the top down your views in industries, so sectors, and your views on stocks within industries, i.e. those sectors, in the stock market. So what we're looking at here on the left-hand side is the stock market. The world view, so this is your macroeconomic view, dictates your view on the stock market, dictates your view on industries, sectors by default, and dictates your views on stocks. But in combination with the top-down view is also the bottom-up view as well. So a combination of top-down and bottom-up is used in the stock market. Obviously, in commodities, currencies, and bonds, there's no such thing as a bottom-up analysis. There's only top-down. So there's only your view on macroeconomics, so your world view, okay? And your world view feeds into your views on the stock market at the index level, commodities, currencies, and bonds. Then we have a gatekeeping process. The gatekeeping process as part of a systematic process is very important. Gatekeeping allows you to time your trades better. So when you have this worldview, and this drives your views in the stock market, commodities, currencies, and bonds, when you have that worldview in place and a bottom-up analysis in your systematic process in place in the stock market, you by default end up with fundamental views on stocks, okay? And at that stage, you end up with what's called a fundamental predisposition, okay? And then you have to time your trades as perfectly as possible. You know, you have to just accept in the stock market that just because you like something fundamentally and you want to buy it doesn't mean you're going to make money out of the trade. You might time it really badly and it might go against you by 10-15%, and then you get stopped out, right? So you've got to have a mechanism in place in your systematic process whereby through a gatekeeping system, you stop yourself doing stupid things, i.e. mistiming fundamental trades. So part of the gatekeeping process is technical analysis and price action. So the timing element, the gatekeeping element adds value to your overall idea generation process. And in terms of split, you're looking in any professional level systematic process, professional trading level systematic process, you're looking at about an 80-20 split in terms of inputs to actually get a trade on. So 80% of the process is idea generation and 20% of the process is gatekeeping. And then you actually have a position on. Now, when you actually have a position on, there's risk management and self-awareness. What do we mean by risk management? Well, you're basically calculating the odds of being right or wrong. You're calculating the volatility and the average true ranges of assets that you're taking positions in. So you know pretty much with a high level degree of certainty what you can make and what you can lose. And when you're building a portfolio of assets, it's very important to manage your risk very well. And the whole point of building a portfolio is to reduce your risk overall. So you pretty much know all the time, if you're a good risk manager, what you can make and what you can lose. And then there's examples here in the risk management and gatekeeping process, what risk you actually want to take in your portfolio. So you have gross exposure limits, net exposure limits, you understand beta hedging and you know your beta risk. You have limits on themes. Themes, what we mean by that is what's driving your trade ideas. So your whole portfolio doesn't become one trade idea, but across 10, 15 positions. Position limits, so single position limits. a stop to target ratio of 1 to 3 risk reward, and how you actually treat your winners and losers inside your portfolio. And then, probably the most important, the Kelly criterion in the self-awareness statistics, measuring your performance and really understanding what you're good at and what you're bad at. Are you a good idea generator but a bad risk manager? Are you a bad idea generator and a bad risk manager? Are you a good risk manager and a bad idea generator? You have to really understand this, and this comes, doing, at least 50 trades plus. So it can happen. It takes quite a while to really start understanding yourself. It could take 6-12 months to start really understanding yourself as a trader and what you're good at and what you're bad at. But it's very, very important as part of this overall systematic process to understand this. So the systematic process, the most important thing out of the 4 steps is idea generation. And what we do in the Professional Options Trading Masterclass is assume that you have this in place already. And you've got the gatekeeping process in place already. And now you're actually going to pull the trigger. You've decided, I am fundamentally bullish on this stock, so I want to buy it. What's the best way to buy it? I am fundamentally bearish on this stock. I think the stock is going down. What's the best way to get exposure to the downside? So when this stock falls, I make the most money. I have an optimal position on, okay? This is very, very important to understand when defining the mandate, because a lot of retail traders do trade options just for the sake of trading them. And that's why the vast majority of retail traders lose when they trade options. So we have to define this mandate. We have to understand that in the Professional Options Trading Masterclass, we're not going to be teaching you the idea generation phase, the gatekeeping phase, and the self-awareness phase. The Professional Options Trading Masterclass is about teaching you why and when you would take an options position and not take another type of position, and also why you would take a certain options position and not take on another options position. So it's all about what marginal benefit do you get from trading an option, okay? And this area here, risk management and having discipline, this becomes part of the POTM. Why? Because volatility is a major, major factor when considering trading an option over not trading an option. So that's a systematic process that we teach in the PTM video series. This is what we teach in the PFTM video series. So the Forex Trading Masterclass. Now this is pretty complex, but the basics are pretty much the same. We have an idea generation phase up here. And ideas are dictated in currencies, okay, by your worldview and vice versa. Because currencies, when they move, are actually a leading indicator to other asset classes. So this whole area here is the idea generation phase. And there's different indicators that we look at, but essentially they're all macroeconomic indicators. There is no bottom-up analysis in currencies like the stock market. We're not looking at companies here. We're not looking at stocks and getting an absolute view on a company, regardless of what is happening in the world. The only thing that matters in currencies is your worldview, is your macroeconomic view. And then we have the next phase, the gatekeeping phase. We have the discipline, risk management area of the systematic process. And then we have self-awareness statistics. So like I said, this area here, we're not going to go into this detail, obviously, in the options trading masterclass. But this area here is the idea generation phase. This is the most important phase in a systematic process. So in defining the mandate, it's very, very important again, to define what we're not going to be doing in the POTM video series. What we're not going to be doing in the POTM video series defines your mandate. We get rid of a lot of stuff that's unnecessary. So we assume that we're already at this fundamental predisposition, and we're going to get right to it. We're going to cut to the chase and get straight into options. So we're not going to be covering currencies, commodities, and rates in the options course. We're going to concentrate on stocks, okay? We're going to concentrate on stock options and options with an underlying mandate that's within the remit of the stock market. And we're going to be concentrating on the US listed stock options market, which is the most heavily traded stock options market in the world. It has the most liquidity for retail traders, and it's the most relevant to our student base and has the most information. So it's the best resource by far for teaching and also learning how to trade options and become profitable trading options consistently over a very long period of time. So we're going to be concentrating in the stock market, in the US listed stock options market. So in summary, this is what we're going to be doing in the POTM video series. So the mandate of the POTM video series is to, number one, provide an in-depth educational program for retail traders globally on trading options in your retail brokerage accounts, and also for US retirement accounts, so IRAs and IRA Roth accounts. Secondly, we're going to utilize the US listed stock options market as an example subset of data and information, and to pass on the knowledge of how professional traders really best utilize options for consistent career and lifetime profits, assuming that we already have a fundamental systematic process in place. Now, what else is really important to understand as a retail trader when defining your mandate is what your actual approach is going to be. Well, we do this in the PTM and the PFTM video series. It's very important to understand in terms of the retail trader mandate, what you're actually trying to achieve here as a retail trader. Obviously, we're trying to make money. We're trying to make money out of financial markets. But what does that mean? Well, what it means is that you're actually trying to replicate what professional traders do. And typically retail traders get taught exactly the opposite of what they're supposed to be doing. In the PTM and PFTM video series, this is abundantly clear. If you're going to replicate what professional traders do, you have to replicate what the vast majority of them do when they approach the markets. 80% of hedge funds and investment bank prop trading desks, so proprietary trading desks, they utilize a systematic fundamental process for generating trade ideas, and they overlay that, as we looked at just previously, with bespoke risk management processes and professional trader awareness metrics. So what we're going to be doing in the POTM video series is we're going to be taking the exact same approach that the vast majority of professional traders take, and we're going to try and replicate that. So as retail traders or investors even, you want to aim to replicate what professional traders do in the options market to sustain a professional level of risk and return profile. It's a very, very important definition to understand when you're looking to replicate what successful traders actually do. And unfortunately, the vast majority of retail traders, one of the reasons why they lose money in plain vanilla assets or plain vanilla instruments, like in the stock market, trading cash with some leverage in the US or trading CFDs internationally. One of the main reasons why retail traders lose money is because they get taught how to do everything upside down. They don't get taught what successful traders actually do. What I mean by that is having this fundamental process in place. And that is the vast majority of what you use to generate fundamental trade ideas and to obtain views on whether you go long and short assets. And the idea generation process, as part of the systematic process, takes up the majority of your work. And the overall systematic process is, 80% idea generation and 20% the other stuff, i.e. timing your trades, so gatekeeping, risk management, and trader metrics. Unfortunately, retail traders globally, whether they're in the US or outside, regardless of the instrument they're using to trade, their approach is just upside down. They spend 80% of their time thinking about risk management, thinking about and looking at charts to generate ideas. They're spending 80% of their time, energy, and effort on the stuff that professional traders spend 20% of their time on. They're not spending the vast majority of their time, energy, and effort on actually generating really super strong fundamental trade ideas, where regardless of some poor risk management or poor timing, regardless of that, they can be right because your fundamental position just gets it right. Okay, and if you get your fundamental positioning right, that is the most important thing. It's much better and much more preferable from a professional trader perspective to be right fundamentally than to be a decent or good risk manager or time your trades extremely accurately, right? From a professional trader's perspective, getting the fundamental view on an underlying asset is the most important thing. Risk management, timing, that's mechanical stuff. You can learn that stuff very easily and learn it with some experience. What you can't learn from professional traders, typically as a retail trader, is this systematic process of how to generate ideas. Professional trader replication, having the vast majority of your idea generation coming from fundamentals, is the most important thing. And as a retail trader, you want to be aiming to do the opposite of what the vast majority of retail traders do. And that is literally replicating what professional traders do. So what is a professional trader? Well, these are guys who are regulated to trade and invest other people's money, OPM. In the case of a hedge fund manager, they're trading or investing institutional capital and or sophisticated investors, so ultra high net worth and high net worth money. And they're usually offshore private investment vehicles. In the case of an investment bank proprietary trader, a prop trader, they trade or invest the bank's capital. And that's proprietary, and that's why it's called proprietary trading, to regular banking business on behalf of the public shareholders. Now, in understanding professional trader replication, we do this in order to really understand and define the mandate of a retail trader. In understanding the professional trader replication, it's very important to understand what a professional trader actually is, because the world is just full of total misinformation, okay? What you have to understand is that no current professional trader, so a guy who's currently at a hedge fund or a guy that's currently at an investment bank trading on a proprietary trading book, because they're regulated, none of these guys can actually teach retail traders in the public domain. Their compliance departments just simply will not let them do it. But then former professional traders can teach retail traders. And you've got to really understand what the difference is here. Someone who has a history, a genuine history of being regulated and working as an investment bank prop trader or a hedge fund manager, and the difference between that and someone who hasn't. Whether you're learning how to trade stocks, stock options, forex, commodities, rates, you have to go direct to the source. If you go direct to the source, which is a current professional trader who's regulated, they can't teach you. You can only learn this stuff from guys who have been on these desks and who have left these companies, okay? Learning the difference between someone who has a real former professional trader experience and someone who pretends to be is a very important distinction to make, because only a real former professional trader can teach you professional trading strategies. You can't go to somebody who claims to be a trading educator or teacher and they say they've got 15 years experience trading. Yeah, okay, great. But what is that experience? Okay, that's 15 years sitting in your mum's bedroom or in your mum's basement, right? They can't teach you this stuff because they haven't actually been on the desk. They don't know what goes on. They don't understand what a professional trading systematic process is. They just have no idea what goes on at the hedge funds and investment banks because they haven't even spent 1 hour on the desk. And generally, they have a conflict of interest. So this is why at the Institute, we only hire mentors that have a genuine regulated history, who have that background. They're the only guys that can genuinely be trusted to deliver a professional trader level mentoring program. And they have the pedigree and experience that professional traders receive, and they can pass the knowledge on. And additionally, at the Institute, we have no conflict of interest. There's no obligation for anyone to join afterwards. We don't get paid an ongoing commission or subscription from brokers and other service providers if you decide to join the Institute later as a retail trader in our community. At a bare minimum, all we do is pass on the information for a flat fee because it's worth it. And it's more than worth it for the student. And it helps us create a profitable community. So if you want to know the full regulated history of our traders, just go to the website. Go to our website, itpm.com/mentoring. You can also go on the regulators' websites like the FCA in the UK, FINRA in the US. You'll be able to see the full background of our traders. All of our mentors have been, or actually still are, professional traders that have been allowed, due to their seniority and success, by their compliance departments to teach retail traders in their limited spare time. And it's very important because it proves that what you're going to learn in the Professional Options Trading Masterclass is 100% how professional traders actually do things and how you can replicate the strategies in your own retail brokerage accounts or retirement accounts for consistent lifetime profits. You can also have total confidence that what you're going to be taught in the POTM and our other video series, the PTM and the PFTM, is 100% accurate in how the vast majority of professional traders do approach the financial markets and when trading options. You just no longer, in this new world of internet discovery and internet education, you can bypass all of these charlatans. You can get straight to the source now. All these guys who claim that they've got years of professional trading level experience, but they've never actually been professional traders. You can skip these guys now. When they preach to you what is right and wrong and pretend to be former or current professional traders by simply copying our narrative, when you bump into these guys now, you can literally just bypass them. Like, you need to understand, and read between the lines, who's actually got professional trading pedigree and who hasn't. And that's what it really comes down to. How can you replicate what real professional traders do with somebody teaching you who has never actually been a professional trader? Well, they can use the same words as professional traders. They can use the same language. They can use the same sentences. But you need to be able to read between the lines here. It's very, very obvious to professional traders who actually has a professional trading background and who doesn't. It's not so easy for retail, okay? And retail traders get hoodwinked by these charlatans all the time. And by the way, it's 95% of trading educators out there, 95% of them have got zero professional trading experience. I would say only 1 in 20 have some professional trading experience at a certain time in their career. We're in the minority. Former professional traders as trading educators are in the minority by far. So, coming to guys like us to learn how to trade options and learn how to trade full stop. It's a very, very important distinction to make, because you can really shortcut your way to really understanding and learning the real information of what professional traders actually do to get lifetime consistent profits. Professional trader replication, when you're defining your mandate, is very, very important. What we're looking to do is replicate what the vast majority of hedge funds and investment bank prop traders do, not what charlatan educators and brokers teach, and what current or former options market makers do at investment banks. A professional options market maker and a professional prop trader at an investment bank are two totally separate business entities, and they sit on different desks and even on different trading floors. There's a lot of guys out there that teach options trading, and they've come from options market making desks. A prop trader has a totally different mandate. A hedge fund manager or a prop trader has a totally different mandate to these guys. So you have to understand that if you're going to an options market maker or former options market maker to learn how to trade options, they're looking at options through a very different lens. And the lens that they're looking at options through is the way they've been taught it, okay? They're two totally separate business entities, therefore they're two totally different mandates. The way an options market maker makes money out of trading options is totally different to the way a hedge fund manager or a prop trader at an investment bank would trade options. They're very, very different approaches. When you're replicating professional traders, you need to replicate what hedge fund managers and investment bank prop traders do, not what options market makers do. It's a very important distinction. So what's the purpose of an options market maker? Well, it's to make a two-way market. So a bid and an ask, a buy and a sell in the options of certain stocks. So they're making a two-way market, a two-sided market. So it means that at all times, their firm is willing to both buy and sell those options. And their computer systems are continuously feeding their quotes. So the quotes as in the prices at which they're willing to buy and sell on the options exchanges where they operate. The market maker's profit comes from the difference between those prices and commission. So the prices at which they buy options and the prices at which they sell, so the spread, and they are incentivized by commission. So the large banks and brokerages like Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, they make up the majority of the quotes and volume in the options business. We are not looking to replicate market makers. We're not making a better bid or a better offer than the market maker and trying to make money, okay, out of that way. We're not looking for arbitrage opportunities. We're not in competition with market makers in the way that options market makers teach you options, as in if they're coming at it through a certain lens, the way they've been taught, they will end up by default teaching you what they know, okay? And what they know is how to make money as an options market maker. They don't necessarily know how to make money as a prop trader. We're not going to be competing with market makers on price. Their computer systems do this already, and there's quants that do this. This is not your mandate as a retail trader. Do not learn options trading from a former floor trader or options trader, options market maker, because they're going to teach you 90% of their approach that they're going to teach you is actually completely irrelevant for the retail trader mandate. You're not going to have an edge in the options market by learning what these guys do, okay? Now, charlatans and brokers, so charlatan educators, they always blur the lines in the options market when teaching options trading strategies to retail traders. They're always trying to teach option strategies that add little to no value to the retail trader mandate. They're only useful to options market makers, and we are not in competition with them on price. We're not here to nickel and dime. We're not here to make a better bid or a better offer in call options and put options. We're not competing with market makers. If you learn from market makers, and or charlatan educators, what they're going to be teaching you is the way they operate, the way they see through the options trading lens, which is literally the opposite of what a hedge fund manager or an investment bank prop trader would actually do when they're trading options. They're not going to teach you how to do this as defined by the retail trader mandate. The retail trader mandate is professional trader replication. It's not market maker replication. It's not options market making replication. It's professional trader replication. And a professional trader is a guy who's at a hedge fund or an investment bank that has a mandate to make money on a proprietary basis for their investors or their shareholders. We're not options market makers. Please get that into your head. It's a very, very important distinction to make. So your job as a retail trader is to trade in line with the way that the vast majority of hedge fund managers and investment bank prop traders approach the options market, which is with a 1 to 3 month time horizon when entering positions. We're not here to replicate the options market maker and try to make money over one day, nickel and diming options, trying to get a slightly better price and trying to arbitrage the spread between the price of a call option or the price of a put option. You know, we're not trying to get in and out on a 1, 2, 3 day basis. We're trying here to take fundamentally driven calls on stocks and use stock options as a product to structure a trade idea instead of using cash or other derivative instruments like futures, CFDs, ETFs. The vast majority of hedge fund managers and investment bank prop desks, unless they're specifically set up to do so, do not attempt to nickel and dime options market makers in order to day trade options or arbitrage them. They have a 1 to 3 month trading or investment horizon, and they use options to gain an edge in their trade structure over the more plain vanilla trade structures like simply going long or short a stock or another derivative instrument. Now, we're going to be looking later in the video series at market makers and options price discovery in depth. But here, we've just got to understand what the mandate is, right? The mandate is professional trader replication. We have to define that properly. We are in competition with options market makers to make money, but we are not in competition with them in order to nickel and dime them and arbitrage them to make pennies. Leave that to the market makers and the quants. We want a hell of a lot more upside than that. We want much more upside. And this is what you should want in your approach. And to have an approach that stands the test of time in adding value to your retail brokerage accounts or retirement accounts, you need to extend your time horizon to 1 to 3 months, in line with how the vast majority of professional traders accumulate multiple 1 to 3 month time horizon trade ideas, and they structure trades around these ideas. Having that fundamental predisposition first, and then using options to structure trades optimally around those ideas, okay? We're not in the business of being in competition with market makers, options market makers, in order to try and get in and out of options at prices that make us pennies. We don't want to do that. We don't put trades on for the sake of it. We have a fundamental predisposition in place. It's very, very important when defining the mandate to understand that. And that if you go to charlatan educators that don't have professional trading backgrounds, you're never going to get a professional trader replication, because they literally don't understand. They haven't spent an hour on the desk of a professional trader. So they literally don't understand what a professional trader systematic process is, what a professional trader does when they structure trades in the options market optimally, okay? They don't understand that because they've never been there. They've never done it. Options market makers, they understand it, but they don't teach it properly because, again, they're coming through the options market looking through a different lens. 90% of what they teach you will be what they have learnt, i.e. how they have learned how to make money as a market maker. That doesn't cross over into your mandate whatsoever. It's totally irrelevant. And this will all become a lot clearer when we go through the options trading masterclass video series. But professional trader replication, as we're defining it here and defining a mandate, we really have to understand the difference between what your mandate is as a retail trader and what the mandate is of an options market maker. They're two totally separate things. So you have to avoid these guys because they're not going to teach you really properly how to make money out of options given your predisposition, given your mandate as a retail trader. It's a very, very important distinction to make. So in summary, what is the conclusion here for defining what the mandate is of the retail trader when trading options, and therefore what is the mandate of the professional options trading masterclass video series going to be? Okay, so as we mentioned before, provide an in-depth educational program for retail traders globally, not just the US, globally. International retail traders, even though they trade CFDs, are going to find this incredibly useful as well, especially when you consider that margin requirements may go up drastically in the next 5-10 years in UK, Europe, Asia, or CFDs might get banned altogether. This is unavoidable. Options trading and learning how to do it properly in a retail brokerage account or in your US retirement account, wherever you are in the world, it is absolutely essential to pick up this skill set because it can add a ton of value to you as a retail trader and your mandate. So first of all, provide an in-depth educational program for retail traders globally on trading options in their retail brokerage accounts and their US retirement accounts. Secondly, we're going to be utilizing the stock options market, the US listed stock options market, as an example subset of data and information, and pass on the knowledge of how professional traders, not market makers, professional traders, hedge fund managers, and proprietary traders at investment banks, because they have a different mandate, pass on the knowledge of how professional traders best utilize options for consistent career lifetime profits, assuming that you have already a fundamental systematic process already in place. We're not going to be repeating that information from the PTM or PFTM video series. The POTM is going to replicate what real professional trader approaches are in the stock options market. In defining a retail trader mandate, so in defining your mandate, we're going to replicate what the vast majority of hedge fund managers and investment bank prop traders do in the options market. At the end of the day, your approach has to stand the test of time in adding value to your retail brokerage account or your retirement accounts. It has to replicate what professional traders do, and that's having a 1 to 3 month time horizon and using stock options to structure trades that you fundamentally already want to have positions in. So I would encourage you to keep going over this video at least a few times to really understand what your mandate is here. Once you've really understood the mandate and what it means to replicate what real professional traders do, so not charlatans with no professional trading history, not options market makers who come at options trading through a totally different lens, okay? Once you've understood what genuine professional traders at hedge funds and investment bank prop traders actually do in the options market and how they actually approach things, you'll realize that it's very, very different to the way most people get taught how to trade options. There's a systematic fundamental process in place. We're going to assume that we have a fundamental systematic process in place. And in the POTM video series, we're going to teach, using the US listed stock options market, how you actually then structure trades using options that you already have a fundamental predisposition on. And there's multiple videos and multiple option strategies that we're going to go through. In the next video, we're going to continue defining the mandate and keep building up on this knowledge.